The Treasury Secretary and House Speaker Nancy Pelosi were back on the phone again this afternoon. Their conversation lasted for 48 minutes, and her office said that differences continue to be narrowed on health priorities, including language providing a national strategic testing and contact tracing plan. But more work needs to be done to ensure that schools are the safest places in America for children to learn. Now, Pelosi and the Treasury Secretary will keep hammering away at this deal tomorrow, even as White House Chief of Staff Mark Meadows raises the prospect that Pelosi may no longer be negotiating in good faith.
We've done our best to try to compromise not once but 4 different times on proposals. We haven't seen a lot of action from Speaker Pelosi. Most of the progress we've made have been concessions that the president has made to date.
Now, our own polling with Change Research shows that likely voters across battleground states overwhelmingly want lawmakers to act. 62% said that passing another relief bill should be the Senate's top priority. Only 38% said the Supreme Court should top the agenda. But, Melissa, that is exactly the opposite of how the Senate plans to proceed. Back over to you.
All right, Elon, thank you. Elon Moy in Washington. Well, the stimulus stalemate is leading us to our chart of the day, and we've actually got 2 for you tonight. Check out the action, the 10-year yield rising to its highest level since June. And take a look at the dollar, the greenback actually tumbling to its lowest levels in more than a month. Guy, this is something that you tweeted out early today. What do you make of this move?
I think that's a really unhealthy mix. A witch's brew as we get closer to Halloween. A failing dollar, a precipitously dropping dollar, in my opinion, with yields going higher, it doesn't augur well for the stock market. It does augur well, and Tim can speak to this, for the resource stocks that we've been talking about, Cleveland Cliffs, Freeport-McMoran. I mean, we've been all over that, I think, for quite some time now. So I think that's very positive for those names. But for the broader market, it's not particularly good. You have a falling dollar, rising rates. Inflation is here, folks, and rates aren't rising because the economy is magically doing better. Far from it. I'll say this in terms of stimulus, and Dan and I had a bit of a tiff a couple Mondays ago. I still think something gets done probably tomorrow. I think the president will take a victory lap during the debate, and I think the market for a day or two will like that. I happen to also think it's a sell the news event.
Yeah. Tim?
First thing, I need a better song than I Need a Hero by Bonnie Tyler. The story on the cheaper dollar and higher yields. Look at copper at almost 3-year highs, certainly 2.5-year highs. Look at the move that we've seen in some of those resource plays. But I think the bond market's telling you that you're going to get something done. I know there are structural reasons why bond yields could be moving higher, sheer supply issues and dynamics that the Fed can't entirely control. But to me, the bond market's what I would be following, and it's not going to get away from you on the upside. But those trades, and those include emerging markets, if the dollar continues to deteriorate, and look at the EM or the VWO or whatever ETF you want to look at, that now also have a lot of big cap tech at the top of their balance sheets. So you're also investing in tech with Taiwan Semi, Alibaba, Samsung, Tencent. Those trades continue to work on a weaker dollar, and I would stay with that trade.
Let's say we do get stimulus, and that's what the bond market is, in fact, telegraphing, Karen. Then which sectors do you think get the biggest bumps?
I think banks, the combination of the steeper yield curve with the stimulus. Actually, as for banks, DFS reported, Discovery Financial Services, decent numbers tonight. And that's important because of their credit quality, which was actually better than expected. So banks, I think, would be a big beneficiary. I also think industrials, cyclicals. So I have to disagree with my esteemed colleague Guy a little bit. I think that bond selling off could be consistent with the economy improving, which would also be helped, of course, by stimulus. So I don't think in the short term that's necessarily a bad thing. We can talk more later at another time about losing control of our currency. That's a bad thing. That's why I own Bitcoin, which I know we'll get to later. But for the shorter term, I think it could all be consistent with a growing economy.
On this issue, Dan, Team Guy or Team Karen?
Team nobody. What are we talking about here? We're talking about stimulus and announcement. Just so you know, the Democratic House passed the second stimulus bill months ago. The president didn't think it was a priority until it became a political priority. And the leader of the Senate doesn't even want to pass it. So who cares if Mnuchin and Pelosi agree on a deal that the president agrees with? It's not going to pass in the Senate. And if it did pass in the Senate, the money wouldn't get to citizens or small businesses for weeks anyway. So I don't know what we're talking about here.
Shepard Smith here. Thanks for watching CNBC on YouTube.